Hello. In this video we will be discussing about the updated return introduced in the budget 2022. So before understanding about the updated return, let us understand the existing provisions for return filing. Section 139 deals with the income tax returns to be filed. Section 139(1) states that returns should be filed on or before the due date, which is usually 31st of July or 31st of October, as applicable. Section 139(3) states that a return should be filed mandatorily in case there is carry forward of loss to the next year. In case you miss filing the return on time, you can file a belated return under Section 139(4), which can generally be filed up to 31st of December. In case of any error omissions, you can file a revised return under Section 139(5), which can generally be filed up to 31st of December. So, one cannot file income tax return beyond 31st of December. However, a new section, 139(8)(a), was inserted with effect from the 1st of April 2022, wherein you can file an updated return. An updated return can be filed if you have already filed the return earlier or even if you have not filed the return. Updated return can be filed when you have underreported your income. It can be filed when taxes are underpaid or excess refund is claimed. There is a reduction in unabsorbed depreciation. There is a reduction in carried forward losses. There is a reduction in tax credit of minimum alternate tax or alternate minimum tax. So now let's discuss when an updated return cannot be filed. An updated return cannot be filed if it is a nil return or a return of loss. It cannot be filed if it results in decrease in total tax liability, or results in refund or increase in the amount of refund due, or results in losses to be adjusted against income. Updated return cannot be filed if any assessment, reassessment or revision proceedings have been initiated, are ongoing or completed for the relevant year. Further, if any search, seizure, survey or prosecution proceedings are initiated for any year, an updated return cannot be filed for that year. So, now that we know when it can be filed and when it cannot, let's understand how to file. ITRU form has been notified to file along with the applicable ITR form. In Form ITRU, you are required to disclose only the amount of additional income under the prescribed income heads on which additional tax is required to be paid. For filing the updated return, you have two options. Option A. You can file the return up to 2 years from the end of the financial year upon payment of additional tax of 25%. Option B. You can file the return up to 3 years from the end of the financial year upon payment of additional tax of 50%. Now, let us understand this further with a scenario. One can file updated return for the year 2019-2020 up to the 31st of March 2023 on payment of additional tax at 50%. Similarly, it can be filed for the year 2020-2021 up to the 31st of March 2023 on payment of additional tax at 25% or up to the 31st of March 2024 on payment of additional tax at 50%, and so on. Let's understand the computation of tax liability with help of an example. Let's say you have not filed your return for the year 2019-2020 and you now wish to report your income and pay taxes on it. Assuming your total income is rupees 6 lakhs, the tax liability would be rupees 33,800. Further, you have not paid any taxes earlier, either in form of advance tax, TDS, etc. Now let's say the interest liability under Section 234A, B and C comes to rupees 18,265. So, your total liability would be rupees 52,065. Since 2 years have already elapsed, additional tax payable for filing updated return will be 50%, that is rupees 26,035. Hence, your total tax payable along with interest would be rupees 78,100. You will also be liable to pay late fees under section 234F over and above this. Let us look at the key points to remember. If the income tax return is not furnished earlier, then the updated return cannot be filed for claiming refund. An updated return can be filed only once for an assessment year. If updated return is filed and additional taxes are not paid, then it will be treated as invalid. Where any losses, unabsorbed depreciation and tax credit carried forward is reduced due to filing of an updated return, an updated return for the subsequent year shall also be filed. Hope we have helped you understand the updated return under income tax. Now let us look at the compliances to be carried out by a business entity during the month of December 2022 as applicable. In case of any questions, do connect with us on info@capeco.in.